Hi, how you doing? Mike Coltharp here. Just thought I'd check in with you. I want to talk a little bit about the market and what's going on. One of the things that I do is I help clients avoid the losses that we're experiencing right now. Okay, and I want to show you some live information as to what's been going on the last couple of days, business days. That is, today's only Tuesday, and walk you through how to look at your growth, your net versus gross average rate of return. Okay. And I'm not going to go into the net versus gross as how it works because that's another video. But I want to show you real time what's actually going on and how it can affect you and how, what I do specializes in helping you not lose this money by throwing guarantees and stop losses into your strategies. Okay. So I'm going to go ahead and share screen with you. And I'm going to start off with what's going on today. And today it's let's see here. What time is it? It is 2:18, which means it's 5:18 on the East Coast and the stock market is closed. So what I'm going to do is share my screen with you and show you. This is the finance for Yahoo. And you can see that there's a lot of green here, which is positive, and gold's down. It's not positive, but you can see that what's happening is if you're listening to the TV or the radio, these financial talking heads are probably saying, hey, you know what, it was a light day today or not a good day today, but we ended up in the green or we ended up in the positive, right? They have these fancy terms for when the market is up and down without actually saying the market's down and things aren't looking really good, right? So I'm just going to show you the real numbers. I'm not trying to scare you. I'm not trying to make you, get fear into your heart so that you can call me. I'm just helping you understand the simple ways of looking at what's going on in the market right now. Okay. All right. So let's take a look at the NASDAQ. The NASDAQ ended today up 1%. Okay. Now we're going to go back. I took a picture this morning from my Charles Schwab, and I did a screenshot. So what you're looking at here is a PDF of a screenshot. So let's take a look at the NASDAQ this morning. It was down 6.74%, almost 7% this morning. Yeah, as a matter of fact, let me rephrase that. The last 5 days, right? So in the last 5 days, but we only really have Friday and Monday to show. So really it's only 2 working days, right? Because this morning was the beginning of the 3rd day. And so what we're looking at here is the NASDAQ as an example, actually, that's the Russell, but you can see the NASDAQ is kind of the orangest looking one. That's kind of gone up and down and up, but it's been going pretty consistently down. And sorry, I'm gonna turn off my email here. I told you this is live. I don't really do well with editing because I want you to see the real me and the real thing, right? What's really going on. Okay, so you can see how the NASDAQ has been going down, right? And then of course it hit really bad. Friday was a really bad day, but it didn't do too bad on Friday. But then Monday, that's when it really hit. Okay, but you see, it's going back up though. But the thing I want you to take a look at is look at the down. When it's going down, okay, you're losing money. Now, it's going up again, but it's not going up. So you went down almost what 3%, 3 points, right? And then it's going back up again, but it ended up lower than when it actually started, right? So you still, even though the market was going up in this particular index, you still didn't gain all your money back. So you haven't made any money. The whole idea of investing in the market is so that you can make money. So why would you think that losing money is part of making money? There's a complete opposites, right? But if you watch the media, the talking heads, they're going to tell you that, oh, just hold on. I mean, there's some financial advisors out there that'll tell you, just hold on. We're in this for the long haul, right? Well, what if the long haul is over? What if you're retired now and you need this money for retirement to live off of, and you need to make sure this money lasts another 40 years or 50 years, depending on how early you retired, right? Or how much money you want. Maybe you want to enjoy your retirement with the same amount of money that you started your retirement at, right? You don't want to reduce your income and live off of 60% less than what you were living with while you're working, right? You want to be able to take all of your money and you want to use it and have it last as long as possible. Now, is that possible for everybody? Well, it depends on how much money you've saved. That's really what it comes down to, right? Can't change that because we can't go back. But what I want you to see here is in these examples, you have the NASDAQ lost 6.74%, S&P 5%, Russell 2000 8.7%, almost 9%. Now let's put this in perspective. All right. Now, if you have $1 million under management with your advisor or a 401k or whatever it is, and let's just say, I know that people have allocations that are all diverse. I get that, right? Diversified. But let's say Russell 2000, you had $1 million in that account. Well, you just lost $80,000, almost $90,000. Okay. Pretty much in 2 days, right? Now, that's not good. All right. I don't care who you are. That's not good. That's not making money. When you're losing 90,000 or 80,000 or even $10,000, you're not making money. You're only making money if you're making 10,000 or 80,000 or 90,000, right? But it seems that if you look at your history in your account for the last year or two, or 5 years, or 10 years, you'll see that in your funds, you have a habit of losing more money than you make. Okay? Please prove me wrong. Go back in your history of your statements that you're getting in your accounts and find out how many times you made money compared to losing money. All right. Let me know. Send me a message through this email. Send me an email by responding back. If you know my number, call me or text me, whatever it is. Let me know the last 10 years, have you made more money or have you lost more money? Right. Because I have a study that was produced by JP Morgan Finance that shows that the average investor makes less than 3% on their money. Okay. All right. So back to my point here. Let's just take the S&P 500. Okay. It was negative 5.07% this morning. Now, today, stocks are closed, and now the NASDAQ is up 1.03%. Okay. So let's do a little calculation. Down 5.07%, S&P 500. S&P 500 is up 1.04%. Okay. Same thing with the NASDAQ, up 1.03%, and NASDAQ was down 6.74%. Okay. So NASDAQ was down 6.7%, almost 7%, and the NASDAQ is now up 1%. So really, you lost 5%. Now, if you have $1 million in your account, like I mentioned before, hypothetically, you just lost over $50,000 today. That is almost twice the lowest income average in America. You just lost today if you had $1 million in your account. So I think it's kind of interesting, but I hope this was helpful for you to kind of put in perspective the risk that you're taking if you're not adding a income source or an asset that produces income to your retirement plan, and an asset that actually protects you from the market losses, but allows you to participate in the market growth, which keeps you from actually losing your money, so that when it comes to retirement, you can actually spend the money the way you want to. So if you find this information helpful, please give me a call, send me a text message if you know my number, or respond back to this email, and we can get you on the calendar and have a conversation and see if there's anything that I can do. And oh, by the way, if you want a copy of my book, it is free. Just respond to this email or send me a text message, and I'll send one over to you for free. Thank you for listening, and hope to talk to you soon. And I wish you the best in the market, by the way. I do hope it rebounds.